Let me give you the straight answer up front. Kikoff is worth it if you are starting from scratch with zero credit, but it is not the best tool if you already have a thin file or a few blemishes. It is a credit building service that works through their website, and the whole thing is designed to be simple and automatic. But there are some real limits you need to know about before you sign up. So, what exactly is Kikoff? It is a financial technology company, not a bank. You access everything through their website at Kikoff. There is no mobile app, no desktop download, you just log into your account on the web. They offer a few different tools to help you build credit, but the core idea is that you pay a small monthly amount, they report that to the credit bureaus, and over time your credit score goes up. Simple on the surface, but the details matter a lot. The main feature is their credit account. You pick a plan starting at about $5 a month. That $5 is not a fee, it is actually a payment toward a small installment loan. But here is the key difference from most credit building products. Kikoff does not charge interest, no hidden fees either. They say there is a 45-day refund window, so if you change your mind early, you can get your money back. The $5 plan reports to all three major credit bureaus, Experian, Equifax, and TransUnion, and that is the whole point. Every on-time payment builds your payment history, which is the biggest factor in your credit score. But here's what most people get wrong about Kikoff. They think it works like a credit card, where you have a spending limit and you borrow money each month. It does not. Kikoff reports as a credit account that builds payment history, utilization, and account age. That means it can help your score in multiple ways, but it is not a revolving line of credit like a traditional card. You are essentially paying $5 a month to have a positive trade line on your credit report. That is it. Now, the second standout feature is rent reporting. Kikoff can report your rent payments to the credit bureaus. This is a big deal because rent is usually the largest monthly expense most people have, and it almost never shows up on your credit report. If you are a renter and you pay on time every month, that positive payment history is invisible to the credit scoring models. Kikoff changes that. They report your rent payments, and there is no extra cost mentioned on their site for this feature. So, if you are renting, this alone could be worth signing up for. The third feature is a cash advance. Kikoff lists this as a bonus feature. It is a short-term, no-interest advance of up to a certain amount. It is not the main reason to use Kikoff, but it is there if you need a small cash buffer. Just be careful. If you do not pay it back on time, you could end up with bank fees when your account gets debited. That is not Kikoff's fee, but your bank might charge you an overdraft or insufficient funds fee. So let me walk through a concrete example so you can see how this actually plays out. Imagine you are 22 years old, just graduated, and you have no credit history at all. You sign up for Kikoff's $5 plan, you pay $5 every month for 12 months. That is $60 total for the year. At the end of that year, you have 12 on-time payments reported to all three bureaus. Your credit score might go from 0, meaning you have no score at all, to somewhere in the low 600s. That is enough to qualify for a secured credit card or a small loan. Without Kikoff, you would have to wait months to get your first credit card and then wait even longer to build a score. So, $60 for a year of credit building is actually cheap compared to the alternative. But here is the part nobody tells you. Kikoff only helps if you actually need to build credit from scratch. If you already have a credit card with a $500 limit and you have been paying it on time for 6 months, Kikoff is not going to move the needle much. The credit scoring models already see your payment history. Adding a small installment loan on top of that might give you a small bump, but it is not going to transform your score. And if you have negative marks on your report, like a late payment or a collection account, Kikoff will not erase those, it only adds positive information. It does not fix past mistakes. So let me give you the honest pros and cons. The pros, it is simple, automatic, and cheap. $5 a month with no interest and no hidden fees is about as low as it gets for a credit building product. The rent reporting is a genuine differentiator. Most credit building services do not offer that, and the 45-day money-back guarantee means you can try it without risk. The cons, it is slow. Building credit takes time, and Kikoff is not a shortcut. You are looking at 6 to 12 months before you see meaningful improvement. Also, it is not a credit card, so you cannot use it for everyday spending. You are just paying for a trade line, and if you already have a thin credit file, the benefit is smaller than if you have zero credit. Who is Kikoff best for? If you have no credit history at all, you are young, you are new to the country, or you have just never used credit before, this is a solid starting point. Also, If you are a renter and you want your rent payments to count toward your credit score, this is one of the few services that does that. Who should skip it? If you already have a credit card or a small loan and you are making on-time payments, you do not need Kikoff. Your existing accounts are already building your score. And if you have serious credit problems like collections or bankruptcy, you need a different strategy, like secured cards or credit builder loans from a credit union. The main alternative people compare to Kickoff is Self. Self is another credit builder service, but it works differently. With Self, you take out a small loan, say $500, and you pay it off over 12 months. The money is held in a CD, and at the end of the term, you get the money back minus fees and interest. Self charges interest, so it costs more than Kickoff. But Self reports as an installment loan, which can be a stronger signal to the credit bureaus because it shows you can manage a larger debt over time. Kickoff's $5 plan is cheaper and simpler, but Self might give a bigger score boost if you can afford the higher monthly payment. So here is the bottom line. Kickoff is a legitimate, no-frills credit building tool that works best for people with zero credit history. It is cheap, it is simple, and the rent reporting is a nice bonus. But it is not a magic fix, and it is not for everyone. If you need to build credit from nothing, it is a solid 4 out of 5. If you already have some credit, look elsewhere. Let me talk about something most reviews skip entirely, how Kickoff actually affects your credit utilization ratio. This is a big deal because utilization makes up about 30% of your FICO score. With a traditional credit card, your utilization is calculated as your balance divided by your credit limit. If you have a $500 limit and you spend $250, you are at 50% utilization, which hurts your score. Kickoff reports differently. Because it is a credit account and not a revolving line, the way utilization is calculated can vary depending on the credit scoring model. In some cases, the small $5 balance might actually show as a very low utilization, which is good. But here's the catch. If you have other credit accounts, adding Kickoff could change the mix of credit types on your report, which is a smaller factor, but still matters. The scoring models like to see a variety: installment loans, revolving credits, mortgages. Kickoff adds a new type, which can give you a small boost if you only have credit cards. Another point that rarely gets mentioned, the timing of when Kickoff reports to the bureaus. Most credit building services report once a month, usually right after your payment posts. But Kickoff's reporting schedule is not something they advertise clearly. If you sign up and make your first payment on the 15th, you might not see that trade line appear on your credit report for 30 to 60 days. That delay is normal for the industry, but if you are trying to boost your score quickly before a big purchase, like a car loan or an apartment lease, you need to plan ahead. Do not expect instant results. Give yourself at least 3 to 6 months of on-time payments before you apply for anything important. Now let me address a question people ask in the comments. All the time, does Kickoff hurt your credit if you cancel? The short answer is no, not directly. When you close the account, the positive payment history stays on your report for up to 10 years. That is the law. But your average age of accounts might take a small hit if Kickoff was your oldest account. For someone with no other credit, that could drop your score a few points temporarily. The fix is simple. Keep your oldest credit card or loan active so your average age stays high. If Kickoff is your only account, consider keeping it open for at least a year before cancelling so the positive history has time to build. Another hidden detail, Kickoff does not offer a joint account or authorized user option. That matters because one of the fastest ways to build credit is to become an authorized user on a family member's well-managed credit card. If you are young and your parents have good credit, that strategy can give you a score of 700 plus in just a few months. Kickoff cannot compete with that. So if you have a relative willing to add you as an authorized user, do that first. Use Kickoff only if that option is not available. Let me also talk about the customer experience. Because Kickoff is web only, you do everything through a browser. That is fine for most people, but if you are used to managing everything from a phone app, it can feel clunky. There is no push notification when your payment is due, no widget on your home screen. You have to remember to log in or set your own reminder. For a product designed to be automatic, that is a small friction point. So to recap, Kickoff is cheap at $5 a month, simple to use, and includes rent reporting. It works best if you have zero credit history. It is slow, taking 6 to 12 months for results. It does not fix past credit mistakes. It is not a credit card for spending. And if you already have credit, you likely do not need it. If you found this helpful, hit subscribe for more honest breakdowns.